Hello and welcome to Core Finance. I'm Matt Brown. I'm joined by Tim Harrison, who is it Head of Wealth at Linear Investments.
That's it.
How are you today, Tim?
Well, it's bright and breezy outside. It would appear that we have followed the Americans by naming our storms. Eileen hitting the shores today. So a few trees and a few leaves blustering around Victoria this morning.
Certainly, yeah, very breezy. But what are the headwinds for the markets? Well, or the news. Let's have a look at the news first. Well, Apple, new releases last night. Tim Cook announcing to the world new Apple products. What do you make of this?
What everybody already knew, but the new iPhone X with a $1,000+ target price or price point. No, I mean, to be fair, it's another Apple event. I was thinking about this last night when we got to 6 p.m. London time. Many years ago, it used to be sat there watching the video links to see what was coming out, and it was really quite exciting. Now it would be it's more a case of run of the mill. What can they release that's going to really get the buyers running to the stores and queues building? And with this new iPhone, obviously it was leaked earlier in the week anyway, but it looks exciting, pretty funky styling, new watches and the like. So I think it's, with Apple, they are a trendsetter and everyone else wants to follow. But $160 odd a share, and they've got some way to go to continue that momentum.
And do you think people will be buying a $1,000 or £1,000 phone? Is there a market for this now?
Well, again, if you look at Vertu, who used to be the quasi Nokia handsets for the rich and famous many years ago, obviously they filed for bankruptcy of recent times. So it's a case of, will someone pay to have the X? Clearly, I would say yes. People that buy Apple products are Apple, they are Apple followers, and they will pay whatever. I always queried many years ago why on earth anyone would buy an Apple Mac computer versus a Dell or an IBM laptop. People want Apple product, so I think people will pay that price point. But again, you've got the slightly cheaper ones, and some people won't want to be seen with such inferior models. So time will tell, but it's their core or their key time of the year. In the run up to Christmas, this is generally a good time for Apple shares into the end of Q1.
Fantastic. And moving on to FTSE One to watch. We're looking at Carnival, the cruise operator. What are your thoughts on this?
Well, are their shares going to continue cruising? Again, what you've seen obviously with the US, hurricanes and whatnot, it has caused a bit of a tempering in appetite for the global tourism spectrum.
I think 40% of cruises go through the Caribbean region, so certainly that's going to have an impact.
Exactly that. So you've seen shares react accordingly. They've come off of their recent highs. But again, I think with the storm season, obviously we are in the eye of the storm, without wanting to use too cheesy a phrase. But again, I think in terms of the appetite, obviously jobs, etc., the general theme in the Eurozone and the US is that things are improving. There is more cash around, and so people are looking to spend. Again, with the currency rates the way they are, you could see people taking advantage of that in some respects. And I think with Carnival, it could be a nice one to own for the medium to long term.
And also an oil play as well, with oil stuck pretty much around $50. That's got to be positive.
Exactly that. Obviously, you don't know how much or how little they are hedging and who's doing what and where. But again, with an oil price that's still relatively low in comparison to the last couple of years, these sorts of names, their profitability does look, reasonably strong.
Fantastic. Next up, we're looking at AIM One to watch, IQE.
It's been on the tip of investors' tongues pretty much all year. Their shares have had a meteoric rise. I know they are softer this morning because everyone was speculating that they were going to have a lot more involvement in the new Apple phones. That being said, it is a real one to watch in terms of market leading companies out there. It is still a relatively small entity in terms of revenues, etc., but it's one that I think is pretty cool and very niche in where it's getting involved. And again, I think the tech sector, as things get more and more diverse and more developed, obviously the new iPhone with the biometrics, etc., I think the semiconductor industry is going to be one to watch over the next 12 to 18 months.
And certainly as a takeover play, we've had a lot of UK semiconductor companies who have been bought out.
Well, ARM Holdings, obviously the big one, but again, Imagination Tech, their biggest customer was Apple. Apple pulled the plug. You've seen what's happened there. IQE takeover target, yes, potentially, but again, I think the fundamentals behind the company still look pretty strong.
Fantastic. And looking at the pound, actually trading a little bit lower. We had some hourly earnings figures, but going great guns against the dollar at the moment.
Well, again, you saw the data yesterday, which caused a further strengthening of sterling. And I mentioned last week on this show that I was very much a sterling strengthener against dollar weakness as a play into the end of the year, unless we see something formative from Donald Trump and Yellen and co. To break that trend. I can see things continuing, not aggressively, but continuing to push forward for sterling. As I say, I have been a British bull. Some may say a British bulldog. But again, I think 134 is the next level. If you see it break through there, then potentially you could see things going back towards the pre-Brexit levels, pre-Brexit vote levels, which is obviously around about 150. I think that's a bit heady, but I can see sterling continue to strengthen, in my opinion.
Good stuff. And looking at broker upgrades, downgrades today, we've got Bank of America upgrading Richemont. No price targets as yet, but they've had results out today and they look pretty strong.
Solid figures. Again, it's an area that's been of real interest to my team, the area of luxury goods, online retailing, etc. Now, Richemont is obviously one of the brands that you want to associate yourself with, one would suggest. And again, it's the play on the fact that the world is not doomed and there is a lot more cash. And the likes of Richemont, the likes of Swatch, the likes of Louis Vuitton, etc., are reporting quite robust figures. Again, if you look at China, there is an increasing appetite there. And again, there is increasing appetite from the Chinese investor to look into Europe for opportunity.
And they've just ditched Bell Pottinger, their PR company.
Well,
so.
I think they've been ditched full stop, filing for administration this morning.
Indeed. And looking at the core number today, 153, what is this number?
Steve Morgan's back pocket change as a result of offloading a portion of his stake for his foundation and his own personal wealth. Now, obviously, I highlighted last week the Barclay Groups and the property sector. I also pointed out Redrow. Both Barclay Group, two of their main men at the top, released a bit of cash with a 40 million position sale. You've seen Steve Morgan relinquish some of his stranglehold in the business. Nothing really to read into it. It was a pretty well, it wasn't a massive discount to the market price. But again, is he calling the top in the market?
Exactly.
That's what the punters are saying in the press today. Or is he just doing it because there's other opportunity? He's suggesting it's to diversify his portfolio. And at 150 million, I mean, who can blame him?
Yeah, right or wrong, he's 153 million better off for it. Looking ahead today, the economic calendar, we've got the producer price index, PPI due out 1:30, the monthly budget statement out at 7 o'clock. All eyes to the Bank of England tomorrow, would you say?
Again, with the data figures that are coming from the UK, the questions on everyone's lips are we going to see a rate rise in the UK? And the Bank of England will be watching numbers like a hawk, especially given the way that we are looking with the Brexit negotiations, to see whether or not we can justify a rate rise. Obviously, inflation, we don't want that to push out of control. But again, we are still on the cusp, the edge, if you like. And I would suggest a rate rise, although in some respects might be a good thing, is a little too early. We're already seeing mutterings in the US that they've done a little too much too soon. We don't want to follow suit.
Well, we'll look forward to that tomorrow. But in the meantime, Tim Harrison from Linear Investment Management, thank you very much for joining us today.
Thank you.